Alex Rovira from Brightstar Resources, mate.
And
You've taken Brightstar from 400,000 ounces to 4 million ounces.
That's correct. Yeah, so Brightstar as a business has been around for quite a period of time. Like, it originally was called A1 Minerals. If you've been around Laverton, you would have. The reality is, if we can execute on that strategy, the business should be worth 15 or 20 times what it is today.
Yeah, right.
That's not financial advice, obviously.
Yeah, of course. We've got a disclaimer anyway for this series, mate.
Well, then it could be.
But you're happy with that? You're comfortable with what you got? Are you frightened of you being...
I don't think he's frightened. We've just heard he's not frightened. He's a risk taker.
Yeah, I'm not frightened of anything.
He's not frightened of anything.
But
come on, Ellie.
But I'm just thinking, like, you've got some big players out in the northeastern Gulf circling around and that's doing exactly what you've just said. Do you see Brightstar as a taker?
Look, I will apologise, Alex, for him.
He's from Laverton, it's fine.
Mate, that's not the worst of it, trust me.
And being pretty aggressive, and I think he's got a $70-odd million exploration budget this year.
Wow, that's phenomenal.
Wow,
Ours is only 31. We're a baby company, but
still,
I'm coming for you, Luke. You can't teach someone to tackle, because you need balls and you need technique, and you can't like...
You need hunger.
Yeah, exactly right. You can't tell someone to stand in front of a 130 kilo Samoan unless they wanted to be there. Right? That's just the reality. And I think
that's true.
That you take that same philosophy into the workplace environment. Like, you can't encourage someone enough or motivate them enough.
Welcome back to another episode on the Gold Room podcast. I'm lucky enough to be joined by the great man himself, Eric Hill, today, and we have another Trifecta episode. We've got Alex Rovira from Brightstar Resources, mate. Thank you very much for coming in and joining us.
Mate, thanks for having me. It's great to be here.
Beautiful.
Well, look, Alex has had to battle all kinds of plagues and colds and everything to be here, so yeah, it's great to have you on the show, mate.
No, I wouldn't have missed it.
Excellent. And look, BTR's one of those real bright stories for 2025. So again, your time here is really welcome. We know you're busy out there. We always start these shows with a life and time. So take us back to Alex Rovira and how it all come about, your schooling and your early years right through to where you are now.
Yeah, sure. So I was born in Queensland. Don't hold it against me. The old boy, I was going to say was a geologist. I think he still is a geologist. He'll call himself a geologist. So he was working in Queensland and Northern Territory at the time. So we moved around a fair bit as youngsters. So I grew up in Queensland and then Darwin, of all places, and then moved to Perth when I was 5 or 6 years old, and essentially Perth's been home since.
Yeah,
all my schooling was through in Western Australia. I went to Hale School and then through to UWA for my university degree. So kind of, I'd say Perth's home, born in Queensland.
Any sports, mate?
Yeah, plenty of sport. It was certainly a big part of my life. So I played a lot of rugby when I was growing up. So kind of had an aspiration of playing professional footy for a long time. Kind of had a good crack at it. Played a bit here with the Western Force and then went overseas to Europe for a year, came back. I was probably 22, 23, juggling part-time professional sport, part-time uni. And the old man said, mate, it's probably time to get a real job and finish uni and hang the boots up. And so that was a pretty key defining feature of my adolescence and my early years was playing a lot of sport, a lot of rugby, a few others. So have 2 older brothers. We were fiercely competitive. I was better than them at everything. They would absolutely not agree with that comment.
Awesome.
And
they got us to plug that, by the way, brothers. So
yeah, I'll be sending that around for Christmas. So look, it was a pretty competitive household. Somehow fell into geology and finance, and when I went through university,
explain that to me, mate. Somehow geology and finance. Did you go to a university open day, or was it your old man who was just like, listen, I've had a red hot crack at this. I'm good. You could be better.
Look, ironically, Tony was kind of pushing me away from geology, which I'll touch on in a moment. But I don't know, like any kind of person growing up, you copy either what your father did or your 2 older brothers did, right? They both went to uni, did the same degrees, Bachelor of Science, Bachelor of Commerce. One became an Enviro, now he's an M&A banker, and one works for Chevron in oil and gas, but they've had pretty successful careers.
That's a couple of happy parents you've got there,
mate.
Yeah.
Very proud. Yeah, no,
and
nice.
then, so basically copied them, if I'm going to be completely honest, did the same degrees, Bachelor of Science, Bachelor of Commerce. Commerce was easy, just going through the kind of investment banking, that finance world, and then really juggled with what I wanted to do with science. Somehow found myself doing chemistry in second, third year of uni and thought, fucked if I want to be a chemist for the rest of my life. And I ended up speaking to the old boy, and he's like, well, you don't like biology, you're not very good at chemistry. No one likes physics. Like, have you considered geology? And I was like, well, not really. He goes, yeah, I wouldn't.
No one likes geology.
Yeah, he goes, I wouldn't really recommend it. But look, it was always in the blood. It was always an interest. Like certainly from a market perspective, from a finance, kind of wearing a finance hat, always loved kind of looking at emerging growth stocks and mining companies. So it was kind of always an interest of mine. You know, you love being outdoors, camping, all that sort of stuff. So that kind of married up with the geology world. And I
guess if you have a passion for it, you're usually good at it as well. So it kind of goes hand in hand.
Yeah, look, really enjoyed it. Look, I didn't kind of leap into it in the first year, let's call it, but when I was early 20s, it kind of became the focus, and it's kind of driven a lot of my career choices and ultimately where I'm sitting here today.
Yeah, beautiful. And like, apart from your dad, through those schooling years and uni years, did you have a mentor or someone that you could like revert back to and go, or think about today where you are and go, you know, that person really influenced me and the way, you know, my career went?
Well, it's a really good question. I don't think I probably had a defining mentor or role model during that period, but I always kind of had conviction about what I wanted to do, and it was essentially where I started my career in investment banking and working in that whole finance function as part of the mining industry, really, and getting, you know, privileged to work with, you know, boards and mining companies and executives across a lot of different commodities. That's going to be one of the great skill sets, I think, or benefits of being in that finance world. As you work with a gold company one day, then it's a rare earth company, and then it might be, you know, bauxite and alumina, then it could be, you know, something completely weird and wonderful, some other bespoke commodity. And it gives you really good exposure to, you know, commodity cycles, pricing, you know, supply and demand thematics, what drives a successful company. I suppose one of the great things I noticed throughout, you know, the first 10 odd years of my career in that banking world was there was no one role or person that made a great CEO or an MD. And I worked with some guys, like geologists, engineers, accountants, lawyers. And some of them were excellent. Some of them could have been the best engineer or geologist in the room, and they could have been terrible people managers and had no people skills, and they might not have, you know, probably been the best CEO or MD they could have been, but they could have been excellent at their craft. And on the flip side, you saw lots of people that probably middling to best at their craft, but were excellent people managers, had visions, were very strategic with what they wanted to do, and were very successful in their, I suppose, their pursuits. So I think a lot of that was kind of driving some of what I liked or what I got out of my early career, and it's kind of driven a few decisions to get me here.
Yeah, sure.
Mate, I want to get into your time at Canaccord. How many years were you there?
So Canaccord and its predecessor for about a decade. It's about 10 years essentially in the same role. So working with largely, you know, equity capital raisings and M&A and corporate advisory, and principally, I'd say 99% of what I did was metals and mining, given my background and my interest in what I wanted to do. So, you know, I didn't really lean into any healthcare or tech or industrial things. That wasn't really for me. Just love the rocks, to be honest, and loved kind of getting to know stories and assets, and that's the reality. Like, you know, we pick on Brightstar, right? Our assets have been around for a long period of time. And, you know, Sandstone was mined in the 90s. Some of our Laverton ops were mined in the 80s. So they've been around. You know, Menzies has got a 100-year mining history. So it's actually kind of cool seeing a lot of these companies and all these assets get new leases on life. You know, commodity prices change. You know, there could be, you know, new discoveries in and around those existing fields. You know, Spartan's a great example of Dalgaranga's been around forever. You know, Clarkie mined that 30 years ago, I think it was. And then originally, obviously, Dalgaranga had probably a couple cracks at life when it was originally operating, and it took someone to change the focus a little bit and drill a few holes differently, and all of a sudden you had what became Spartan and a couple $1 billion takeover. But you know, that asset's been around for forever, right?
And that's project.
And I think that's what's awesome about this industry is it can take a different person to look at things slightly differently. You know, better access to capital, a bit more, you know, not brave, but, you know, a bit more bold in terms of some of your decision making and risk appetite, and then you can create discovery, and that's true value creation. There's not many other industries on the planet where you can take, you know, a patch of dirt and turn it into something that's worth $2 billion within 2 years when you poked a few holes into it. So that's true value creation. You know, that was life changing for a lot of shareholders, stakeholders, employees, staff. Something close to home was Tony's, my old man's Azure Minerals was something that, you know, that was a 20-year overnight success, right? I saw firsthand that management team and Tony kind of, you know, being in Mexico, looking at silver, different commodities, copper projects. COVID hit, couldn't get to Mexico. You know, ended up picking up a nickel project in the Pilbara. Ended up becoming the Andover lithium discovery.
Yes,
and it was bought by Gina and SQM for a couple $1 billion.
Yeah,
and again, knowing some of the staff there, you know, that was life changing for those guys to go from what was 10 cents to $2.80 or whatever it went to eventually, and you know, people paying off their mortgages, paying school fees.
That's beautiful.
You know, look, it's actually
That's what
great.
it's about.
100% it is. Like, it's actually really cool. So again, that's certainly our aspiration with our business is that ultimately, we've probably looked at it a little bit differently. Actually wanted to build a production-focused business, kind of looking at, where do you actually kind of create value, or it really to me comes as either discovering something or building something.
Yep.
And discovery, what's your chance of success? I mean, there's been Andover, Never Never with Spartan, Hemi with your Grabe, Chalice.
Yeah.
But there's probably, there's only a handful like every couple of years, right? So your chances of genuine life-changing discovery success are relatively limited. I think statistically you kind of call it right.
It's time, and then getting that capital raise, and then getting the holes in the ground.
Yeah. And then being, I was going to use the word lucky. Like ultimately, you are lucky, right? Like you can't.
But you make your own luck, right?
Spot on, right? You can't put the rocks and you can't put the metal in the ground, but you have a thesis, you have an idea, you get the capital behind you, you get the right people in the business, you make sensible decisions, and hopefully you can create some value. I suppose our journey was a little bit different. We took the view early on with Brightstar that I wanted to go after mature assets that had just been missed by the market. The previous management teams might not have had that access to capital, Josh, or they might not have had the teams in place to actually execute on growth strategies. And the opportunity for us was to take very mature assets that were well known, that previously production history, so the geology is known, the metallurgy, the geotech, like all those sorts of things, and just give it a new lease on life, in short. Like it's almost as simple as that. Yep. These assets have been around a long period of time. We're not any smarter than other people in the industry, right? It's having conviction, it's having a passion, it's working hard. We built an awesome team of guys that work really bloody hard. And
Mate, you've taken Brightstar from 400,000 ounces to 4 million ounces.
That's correct.
You've done absolutely amazing things with the team that you've got.
Yeah, and look, we've been very active on that whole M&A front, right? Like we've made no secrets about that. We kind of had a vision that we wanted to have scale. We wanted to be relevant to the industry. Like you want to be a 200,000 to 300,000 ounce producer. You don't want to be a 50,000 ounce producer. Yep. Not that there's anything wrong with that, but like I suppose wanting to ensure that we had the right stakeholders and shareholders that wanted to back that vision, you kind of had to have scale, right? Yep. And I think I would rather try and build a Ramelius or a Westgold than something that's a 30 or 40,000 ounce producer.
Sure.
So that drove a lot of that decision making, and because of the assets, to your point, Josh, that we've been able to bring into this business, like we've actually been able to attract a lot of really good talent from the mid tiers, like guys that are in their late 30s, early 40s that are actually hungry. They want to build something. They actually want to have a crack.
Ground up.
Yeah, correct. Yeah. Right? It's very rare that you can actually go build something from scratch. And I'm a student of history. I love, looking at mining companies that have been successful over the journey. Ramelius is a great example. They started with Wattle Dam, which I think had a mining inventory of like 25 or 30,000 ounces. It's bugger all. Now you fast forward now and, they're targeting 500,000 ounces per annum.
Yeah,
like Wattle Dam was tiny.
Yeah, it's amazing.
Even Saracen, they started with that South Laverton operations, which essentially became Carosue Dam, which was 115,000 ounces in total. That was the entire mining history of inventory when they started. That was a 2-year mine life. And again, you fast forward 15 years and it creates something huge.
Yeah. I like the Daisy Milano, the Silver Lake story, the Red 5, and then into Vault Minerals.
Yeah.
Like that Daisy Milano has just been...
it's been going forever for a long time.
On giving, yeah.
Well, to your point there, Josh, like, Vault or Red 5 was the mining in the Philippines at once upon a time, right? Like they had Philippines mines not even that long ago, I want to say 8 or 10 years ago. That's what their business was. Really? And then they pivoted and bought King of the Hills. They bought Darlow, and that was a new lease on life. They took some capital that they'd basically gained from their operations in the Philippines.
Red 5.
Yeah, this is Red 5, right? Yep. That was the journey of Red 5. They bought Darlow, they bought King of the Hills, and now obviously they merged with Silver Lake, and now it's Vault, and they're now $5 billion company or something like that. And it's again value creation.
I was just going to say we probably jumped the gun a little bit. If we just rewind a little bit in the BTR story, so how did all that begin? Like, did you have an asset and then started building that, or what was Brightstar? If it was
the origin story,
before say Laverton and Menzies and Sandstone.
Yeah, so Brightstar as a business has been around for quite a period of time. Like it originally was called A1 Minerals. If you've been around Laverton, you would have seen them. They had some mining operations in the early or kind of 2007 through to about 2010. That's when they had some of these assets south of Laverton and also an asset called Corktree Well. That didn't end up going amazingly well for that particular business. It was called A1 Minerals at the time. They then took some financing from an offshore group, essentially out of Southeast Asia, became a company called Stone Resources. So essentially the same company, just changed name, different ownership. And look, for a period of about 10 years, there wasn't a whole lot happening with that company and that assets, basically. And it was one of those companies that was kind of stalled or moribund, like didn't really have access to capital. It was arguably uninvestable in terms of the amount of debt it had on the balance sheet.
Okay.
Who owned the shares, and again, a lot of offshore ownership. they actually sold a non-core asset in 2020 to Regis Resources up in the Duketon. They
Okay.
sold an asset called Ben Hur, which Regis are actually mining now.
It's huge. I drove past it about 3 weeks ago. It's massive.
Yeah, so it's going really well. So they sold that asset and really used that as a catalyst in 2020 to rename the company. It became Brightstar. The board changed. They got rid of all the equity overhang by the Chinese at the time. They actually got rid of all the debt on the balance sheet. Wow. And in 2021 became a kind of an interesting company. And at that time, I had a market cap of sub $10 million, had 400,000 ounces, hadn't drilled a drill hole in 10 years. Wow. You know, so I'm looking at it from a geology perspective thinking, okay, there's been, you know, pretty systematic exploration through the eastern goldfields around Kalgoorlie, et cetera. Yep. You've got a package of ground here that's clearly mineralised, clearly got old mines there, hasn't had a drill hole under it for a decade.
Screaming for it.
Yeah, what can we do here? And it also had the infrastructure. So it had the old processing plant, which has kind of been a key part of our strategy, is trying to leverage off that infrastructure, whether it's our infrastructure or other infrastructure in the district, and, you know, things like we've done with Genesis and a few things like that. So that was really the origin of Brightstar. I got involved actually from a financing perspective in kind of 2022, I think it was, 23, working with the previous board and management team about wanting to kind of reintroduce some passion and energy to that part of the goldfields, you know, put some capital to work. And then, look, I was actually just chatting with the board and the MD at the time, and he asked me a few times, hey, do you want to be MD? And I thought, that's a terrible idea. I don't want to do that. No. But
you warmed to it, right?
Mate, you must have got me on a bad day or something. I'm sure. Yeah, correct. And I thought, look, if I was going to do it, I wanted to do it, you know, properly, right? Like, you need to have scale. So really kind of worked up this whole M&A strategy playbook about what we wanted to own, why we wanted to own it. Everything we've been, you know, we've done 5 M&A deals in 2.5 years. I mean, that's literally unparalleled. But it's been for a reason. And every one of those things we bought will be a mine, or is a mine now.
What's the process of that? So you and the team come up with a strategic approach. You then go back to Canaccord or whoever you guys are using. Are you using Canaccord?
We do, yep.
Yeah, I can only imagine. So run me through the process of an M&A.
Yeah, look, it's a really good question. It's look, M&A is one of those funny ones. Arguably, the reason that stops very sensible transactions is people, and the social issues are the biggest ones of any. Yeah, well,
would you say there's a bit of arrogance in the industry?
Or ego?
Ego.
It's certainly ego. It's egos, and it's also people that are very comfortable in their jobs, right? And I think the reality is, what I'm actually asking you to do, Josh, is, hey, I think my company should buy your company, and you don't have a job. And then you turn around and say, well, that sounds like a terrible idea because I actually need this job because my kids are at school and I've got a mortgage and then all of a sudden
it's a hostile takeover.
Yeah, or like you've got to remind management teams that, you know, they are the management, right? They're not the owners of the business. The owners of the business are the shareholders.
That's right. So what's best for the shareholder? Yeah.
Correct, right? And so we've you know, had a little bit of success over the journey and essentially going largely to the shareholders and saying, hey, this is what we're proposing. This is why we're proposing it. This is why we think it makes sense. And the logic is we want to try and build a mid-tier producer. Yeah. And if this business works and we could build a 300,000 ounce producer, and you look at any of those peer comps, you know, Westgold, Ramelius, Vault, Genesis, they're all $4, $5, $6, $7 billion companies, and we're a $300 to $400 million market cap. So the reality is, if we can execute on that strategy, the business should be worth 15 to 20 times what it is today.
Yeah, right.
That's not financial advice, obviously.
Yeah, of course. No. We've got a disclaimer anyway for this series, mate.
Well, then it could be. But look, that's the intent of what we wanted to do. So the M&A, the whole concept is you've got to come up with an idea that's genuinely makes sense. And I suppose you take a step back from an M&A perspective, you know, the industry doesn't have a great rep for, you know, prudent capital management, sensible M&A. You go back a previous cycle 10 or 15 years ago and there's all the mega mergers and all these big asset acquisitions and arguably none of them made shareholders any money. And you had a period of time where, you know, nothing, you know, whilst it might have made sense on paper, it never really translated into value creation. I think it's a little bit different now, and I think we're actually going into this period where there has been and there will be continue to be a lot more M&A just in the sector in general. The reason being is the producers are making more money than they ever have. You've had this period of huge margin expansion on the back of the gold price. Yep. The balance sheets are in better condition than ever. Like, they've largely all bought back their hedge books. I know, like, they're trying to produce spot gold.
On spot, yeah.
You know, largely got debt-free balance sheets, a lot of cash. Then, you know, look at what Regis are making $50 million a month. Genesis, a couple $100 million a quarter. Like, there's, you know, Ramelius' last one, a couple $100 million a quarter. Like, just phenomenal. Huge numbers, right? Like, you could. That's never happened in the history of the gold mining sector.
Not that much, no, for sure.
So I think what we'll continue to see is a lot more M&A in that space. And you'll see, I think management teams now being a lot more focused or prudent with some of the decisions they do with respect to some of that M&A. And I think, personally speaking, I think you will see a lot more of some of the mid-tier producers and larger producers buying some of the smaller explorers and developers because they haven't been valued as much by the market as some of the producers have. So you've got this landscape where the big end of towns had this value re-rating. Their share prices have gone up. They've got heaps more cash on the balance sheet. They got rid of all their debt. They're producing heaps of gold. And the junior end hasn't really moved, or if it has moved, it's kind of back where it was 2 years ago. So, you look at kind of our peer group or even Brightstar, the share prices now, might be up on where they were 3 or 6 months ago, but they're probably much where they were 2 years ago or 5 years ago. So, Ramelius have had a great example of it. They bought Spectrum, they bought Breaker, they bought Musgrave, they bought Apollo. They've bought quite a few companies. And I suppose the consistency there is they bought advanced exploration, early development stage plays, which are now in their growth profile and they're in their growth journey. So I think you'll continue to see a little bit of that, but it's an awesome landscape. Like, it's pretty unparalleled, really, like in terms of that margin for the producers.
I'm going to ask a curly question while we're on M&A.
Go.
Where's that look for Brightstar?
Well, good question. Something I do get a lot, just given the history. Look, we're very comfortable with the portfolio as it stands. I think that's the reality. Is we've been very active wanting to assemble the portfolio that we do have, and now we have that. Like, we don't need to do anything else, is the reality.
No.
Like,
the Ormin deal, the last one up at Sandstone, it's a great consolidator.
Yes.
But you're happy with that? You're comfortable with what you got? Are you frightened of you being...
I don't think he's frightened. We've just heard he's not frightened. He's a risk taker.
Yeah, I'm not frightened of anything.
He's not frightened of anything.
But
come on, Ellie.
But I'm just thinking, like, you've got some big players out in the northeastern Goldfields circling around and doing exactly what you've just said. Do you see Brightstar as a takeover target?
Yeah, look, potentially. Yeah, look, I think that's the reality.
But you're not building it for that?
No way. Like, we've got an operations team. Like, we've spent so much time, effort and capital, to be honest, in the last 12 to 24 months building operations, building out teams. It's something that, I'll use my personal experience. Like, I've spent arguably 10 years on, tangentially involved with the mining industry, daily in boardrooms with company management teams and seeing companies go from explorers to producers, but you don't fully appreciate how much goes into that until you are doing it. And that's everything. Like, and it's things you don't even think about, like
blood, sweat and tears.
The finance function, OH&S, HR systems, ensuring that, all your approvals and your permitting and then, your geology engineering teams interplay with the production team versus your studies team. But, like, that's all stuff that the market doesn't really see, right? And I think that's what we've
that's all the hard work
behind
the scenes.
And I think we've done that really well, and I think that's what's going to set our business up for the next level of growth. And I think that's the reality.
And there's nothing wrong with that. You just keep growing it. Growing it and growing it until someone does come in and buy it.
Yeah, well, hopefully not. Hopefully we can genuinely build it into something that's going to have scale, and that's what we're there for.
The mid-tier mining.
Correct.
Set your sights.
Yep.
Beautiful. Mate, let's get into Laverton operations update.
Sure. So we actually put an announcement out recently on our recent parcel through Mount Morgan. So just for reference, we've got what's called an all purchase agreement with Genesis Minerals. They've got the Mount Morgan's mill just southwest of Laverton. So we had a great successful parcel through there. It's a bit over 80,000 tonnes, produced a bit over 6,000 ounces to us, which is a great result. That's the first parcel we've had through there that's just been sourced from the 2 undergrounds that we're operating. So for context, we've got 2 operating underground mines, essentially both of them built by Brightstar or now the teams within Brightstar. So one of them was a company called Linden Gold. They essentially built and operated that themselves. They're now
Second Fortune?
That's Second Fortune, correct. And when we acquired Linden, one of the key attractions for us was the near-term developments at Fish and Lord Byron and open pit. So, it's just touching on the previous point about, our management philosophy in terms of building stuff. We went from acquiring Linden to building Fish within 9 months. Brand new underground mine, on time, on budget. We permitted it ourselves. We were operating ourselves. That's everything from your maintenance function, your operators, your tech services, your surveyors, your geologists, your engineers. Like, we are owner-operator.
That's quite unique, Alex.
It is.
Yeah, and any particular reason why you went down that path? You just thought it was more inherent or in-house, so it was closer to your heart? And
spot on. I think it's driven by Exec Director of Operations, Andrew Rich, who came across from Linden. He's got a contracting background, but also experience with Ramelius and Westgold. And Andrew and his team had experience in operating Second Fortune, right? They were essentially owner-operators, and we are pretty keen to make sure we keep that IP in the business and keep that as part of our DNA. We think that there's a lot of value to be had in that and actually being the owner of an asset and the operator of an asset.
What's your staffing levels?
About 165, I think, today. Yeah.
Awesome.
There's two years ago. So
It's amazing what you can do, eh?
it's been a bit of growth.
Yeah, that's a huge.
excellent.
That's a heap of growth.
And on that, like I think if you fast forward a year or two from now, it should be 300 or 400 or 500. I think if we go develop our Laverton assets in Menzies in the short term, and then eventually get into Sandstone, that's going to be a serious business.
Well, just and before we even go on, I just want to touch on that owning that IP. Your latest announcement has discovered a new lode at Second Fortune, I believe.
Yeah, that's correct.
And that's just through, I guess, a lot of that skill set that you've got in house, knowing the ore systems and the bodies and.
Yeah, look, it's a great point there, Eric. Look, that's something that no one knows a mine like the guys that go down the hole every day, right? Yeah. And I think they had theory that essentially the northern end of the Second Fortune main ore body was truncated by what's called the Northern Fault, originally enough, to the
original.
north. I know. and it was always kind of the philosophy that's got to be somewhere else. And it's kind of 2 levels from where we're mining above now. It was tagged in a drill hole that hit, I think it was like 30 centimetres at 50 or 60 grams. So it was a good sniff, kind of shows you that's Second Fortune's pretty unique. It's about a half a metre wide ore body. Like it's very narrow in terms of that. So I think between Daisy, Milano, Second Fortune and probably Rothsay with Volt are probably the 3 of the great examples of it. Maybe Paulson's, with Black Cat, but that kind of real narrow vein underground mining. So we tagged it in this vein, and it was probably 30 metres offset from kind of where it should have been per se. So we took the view that the guys kind of went out there and they developed out there. It's an expensive drill hole. It's 3.5 metres by 3 metres, and essentially developing it with a jumbo. But we got out to it. They found it. They mined it for 25 metres, and then it got faulted off again. And then now the level below, we've mined it out to 100 metres.
Unbelievable.
For context, the strike length of Second Fortune is 300 metres. So you just added an extra, a third to it, basically. Yeah. Wow. And the grades are there. And I think it just speaks to probably not only Second Fortune, but just mining in Eastern Goldfields in general. Like quite often you're following your nose, and then there's so much more upside in mine and around mine. Look at what Luke's doing at Orabanda over in Davyhurst. That's a fantastic example of it, right? Story. Like Riverine has been around for ages. Now it's probably going to have a couple of years of mine life ahead of it. It's pinged down to a kilometre depth.
He's done an amazing job.
Oh, ripper. Yeah.
Well loved through the industry, and his staff speak volumes. So many people have contacted me on LinkedIn and said, you need to get Luke on.
Hey, you should. He's a good man.
He's good. Maybe we can.
Yeah. Look, he's someone I actually chat to in the industry quite a lot as well, because I think his operating philosophy and whatever he's done with that business is certainly what our aspiration is. And he went into that business and he's very aggressive with, I suppose, the development strategy, the exploration strategy. He's now built something that at the time had a 1-year mine life, right? Yeah. And now it's probably got a 5 or 6 year mine life, and it's going to go to 10 or 20. And the reality is that thing's going to continue for a long time. And that endowment along that's got 1,200 odd kilometres of tenure along that strike, and it looks really interesting. So that's a really cool business that we would like to emulate, I think, one day in terms of that operating philosophy and being pretty aggressive. And I think he's got a $70 odd million exploration budget this year.
Wow, that's phenomenal.
Wow, ours is only 31. We're a baby company, but
still,
I'm coming for you, Luke.
But you look around, some of the internationals haven't got an exploration budget that big in Australia. That are big in Australia.
Oh, look, absolutely.
That's phenomenal.
Look, even the mid tiers, right? Like they're now coming to the party, but like Ramelius is a great example. Like they've traditionally been not a huge exploration business, right? They're a developer and an operator, but I think they're spending $90 million this year. Westgold, I think, is 40 or 50. So, there's definitely these exploration budgets are cranking up, which is awesome to see in the industry, right? Like you need that drill meter to find something to get mine life extension. You're kind of proving up things, you discover stuff. And look, there's been a really interesting journey, I think, with some of the emerging kind of, let's call them advanced explorer, early stage developers. They're basically taking old projects that mid-tiers or majors had and are drilling holes under them. Gorilla's a great example, picked up a couple of stuff like Vivian's out of Ramelius or a couple of things from Genesis, and at one stage they had 8 or 10 drill rigs going and finding good stuff. Ben's a good example, Talk, some of these kind of emerging explorers are just going hard at the footy and they're getting rewarded for it.
Results.
They're finding stuff and the market's rewarding it, which again is value creation. It's what everyone needs to see.
Yeah, for sure. And I guess with that in mind, it's still on the Laverton operation. So next year, potentially looking at the commencement of a processing plant construction?
Yeah, that's correct. Yeah. So we've got our processing plant on care and maintenance up there. The reality is we did a lot of work with the engineering partner at the time about refurbish versus
GRs.
It was Como originally in the DFS, and then doing a little bit of work with Como and GRs at the moment actually. But we looked at, refurb v brand new, kind of landed on let's call it a 90% brand new, reuse a bit of the stuff, but it's essentially a brand new mill. And we'd be looking to make FID on that early next year.
Is that a kit set mill out of China?
No. There'll be bits will come out of China, like ball or sag mills and crushing circuits and things, but essentially, built and
awesome,
and assembled down here.
That's great. Yeah, I've spent a bit of time out at Focus Minerals.
Yep.
And
Coolgardie?
Coolgardie processing plant.
Yep.
Not working there, but walking in and chatting to people.
Yeah.
And that was a kit set. That was a kit set out of China. The last, I think, well, not the last one, but Tropicana, I think, was a kit set out of Tropicana was a kit set out of China. A lot of it came out of China. And when they put it all together, that bolt holes in the wrong place, things didn't line up. And then with this Focus Minerals one, some guys, I think it was Macca. I think Macca was on it, putting it together for construction. And they said, one of the supervisors I spoke to out there said it was flawless. That everything just bolted together how it was meant to.
I thought there was no flaws in it. Sorry.
Yeah, it's amazing.
Trying to run a professional bloody operation here, and I've got this fucking. It's ridiculous. I will apologise, Alex, for him.
He's from Laverton. It's fine.
Mate, that's not the worst of it. Trust me. Alex, I want to get into Menzies and First Gold Pathway.
Yeah, cool. So we now kind of. Once upon a time, we kind of had Menzies and our Laverton operations as almost like two distinct operating areas. We now kind of consider it one. The reality is we're going to be trucking that material from Menzies to our Laverton mill. So when we construct that next year, in this gold price environment, trucking things 150, 200 Ks it's not that scary. The gold price has kind of really meant that the trucking costs aren't a key driver in terms of project profitability.
Haulage is quite low compared to your whole operating costs.
And compared to your processing costs and things like that. Sure. So we now essentially visit the same business or the same kind of asset base. So we are looking at aligning the construction and development of Menzies with the construction of our mill in Laverton. So all going well, you fast forward 12 months from now, we should be pretty close to turning on a new mill in Laverton. We'll have the Lord Byron open pit up in Laverton operating. We'll have a mine down at Menzies operating as well. And then another underground to come on probably in 6 or 12 months' time after that. So, touch wood, all going well. We've probably got 5 or 6 ops going in 12 or 18 months.
Yeah, wow. Hey, Hilly, are you a shareholder?
I refrain from.
I was a shareholder in Price. So I was a shareholder in a number of companies. And then I had to buy a house. So I sold absolutely everything. And I sold absolutely everything in maybe the beginning of September.
Okay.
And I'd done well. In the months prior.
Yep.
And but as soon as I sold them, wouldn't you believe it? All of the bloody stocks took off.
Yeah, you haven't timed that well. I think the gold got whacked in September, didn't it? Came off 10% and all the goldies.
Well, no. My shares took off. Well, the shares that I would have had.
Yeah.
There's some of them.
It's always the way.
Oh, it's shocking. Anyway, mate, sorry to bloody interject. I just want to see if you were bloody going to come to the plate, say what shares you did have.
If I'm not already there, I might be.
Okay, well, that's where I was going. I think I might have to bloody buy a couple of.
Good man.
Yeah, who knows?
Well, if adding to Laverton and Menzies, tell us about the exciting northern part of your projects in Sandstone and the tie-up with Ormin. Alex, how's that gone?
Yeah, it's gone really well. I think, just taking a step back to why we even went to Sandstone originally, because obviously we were Menzies, Laverton, Eastern Goldfields, we were pretty keen on what we wanted to own there, and the reality was we wanted stuff that was near-term mining. So Menzies, granted mining leases right next to the highway, Second Fortune operating, fish operating within 9 months, infrastructure, so that was kind of our philosophy. We, probably 18 months ago looked at where our production profile was probably going to trend towards, and I'll use the DFS for example. We put that out and it showed about 70,000 ounces per annum for 5 years. We're very comfortable that mine life extends and grows, but again, comes back to the point I made previously, do you want to be a 70,000 ounce producer? Now, there's nothing wrong with being a 70,000 ounce producer in this gold price environment. That revenue line is what you were if you were a 120,000 ounce producer 2 years ago. So for context, it's still an enormous business.
Yes.
And I think fundamentally would support a business that's probably got a valuation of maybe 1 to 2 billion. Probably some good comparables in the marketplace today would be an Orabanda or a Catalyst or a Pantoro, or a Black Cat, that kind of range.
So Black Cat's doing so well.
Yeah, so well.
Amazing.
And Gareth's a great man. But looking at, what do we want our business to be? I suppose, is one of the key things. And we kind of said, look, we wanted something that might have had that 10 to 15 year mine life, something of genuine scale, and kind of looked around and knew those assets well, and shareholders and the management teams and things, and just thought there's nowhere else I could find in the West Australian goldfields that had, it's circa 6 to 7 million ounces of gold in that 100 k's around sandstone, and there's not one operating mine. There's no mid tiers, there's no majors, there's no Evolution or Genesis or Ramelius or Westgold, and you kind of sit back and say, well, this is kind of strange. Like, you've got this level of endowment, and they're all well advanced, they're all previously mined, they're all on granted mining leases, yet it was fragmented ownership that was owned by 7 or 8 different ASX companies or private companies, and you kind of sit back and you say, well, that's if that was the goldfields, if that was Kalgoorlie or 50 k's out of Cal, there would have been a 10 million tonne per annum plant there for the last 20 years,
pumping away, for sure.
And it was kind of unique, right? And we thought, okay, well, if we can be successful in here and in consolidating this, there's a real business here of genuine scale. So that's kind of what was a key driver. We also looked at the organic opportunities within Sandstone, right? Like, I think that's one of the key things that I think will show the true value creation over the next 12 to 24 months is how big can those resources genuinely be? The reality is Troy Resources mined the majority of that kind of key sandstone part up until about 2010. It was 95 to 2010 from memory. At that time, the gold price was less than $1,000 an ounce. Their bore mill, the diameter was the size of this coffee table. They could only take
60 tonne an hour or something.
Yeah,
like that.
they could only take oxide dirt. So they didn't drill any holes. They didn't do any mining below 40 or 50 metres. And they were very successful. That project printed cash for Troy at the time. But it's pretty unique that you could have 1 million ounces mined, a couple million ounces in resources in the top 100 or 150 metres, and have very limited exploration below that. Like, if this was near Kalgoorlie or Leonora or even the Murchison, if this project was 100 k's east or west, it would have been mined 20 years ago. Sure. In genuine, proper scale.
It does seem a little bit stranded though, doesn't it? Like in the middle of Leinster and Mount Magnet, it's just sitting there by itself. But
it's on the highway, right? Like,
exactly.
It's a great part of the world for a mine. The reality is you can fly to Cal and be there in 4 hours. You can drive there, you can fly to Magnet and get there in an hour and a half. Like, it's pretty simple.
Yeah, gas running past.
Yeah, exactly. And we're not in Mali or Cote d'Ivoire. Like, this is, you're in the goldfields, right? So it's a great part of the world. So that was a key driver for our philosophy was, hey, there's a huge opportunity to consolidate mispriced assets that the market just didn't like for a myriad of reasons. But then there's also a shitload of exploration upside that was just being missed because the work wasn't being done. So they were the 2 key drivers for why we even wanted to go to Sandstone in the first place. You fast forward 18 months, there's now been 3 acquisitions from Brightstar that's now successfully completed. The last one with Ormin, was extremely logical, right? Like, that tenement package used to belong together. It used to be all the same company.
Yes. Yeah.
That had all the infrastructure. That had all the mill for Troy Resources. So it gave us kind of near on 900,000 ounces of resources on mining leases, which is pretty handy in this gold price environment. What's that? Nearly $6 billion of in the ground value. But the reality was a lot of these other benefits for us, like the infrastructure, the permits, the licenses, the haul roads are all there. It's all done.
Yeah.
Like, you can't sell a haul road to someone, but we don't have to go spend $5 million putting them in or $10 million or whatever it needs to be from each deposit or pit to the mill. So there was a lot of, I suppose, infrastructure benefits and really de-risk the development of our assets, even without looking at the value kind of being brought to the table by the Ormin assets.
Yeah, for sure.
So that was the key driver for it. And look, being around and around the hoop for a few M&A transactions over the journey, I've never seen a deal like Ormin. You look at the shareholders that voted on that, it was 99.8% in favour. And I think 60-something percent of the register voted. So the voter turnout was unheard of. And then to get 99-point-something% again is unheard of. I think there were 2 shareholders that voted against it. 2 out of 7,000. It's pretty crazy. And I think that just speaks to the industrial logic, right? And
it's compelling.
Yeah, and the word synergy gets thrown around a lot in M&A. Oh, this is plenty of synergies, but the reality is these projects literally touch each other. And they were all part of the same company 15 years ago, and we're just simply reuniting it under the right umbrella, and it really gives us the opportunity to go pretty hard at the footy with exploration, which is what we're doing. We've had 6 rigs out there for the last couple of months, and again we'll rip back into it come January.
Yeah, beautiful, great story. Yeah.
Mate, let's get into gold market and optimum timing. So you've said it's a great time out there to be a gold producer, which if you're a gold producer, it's a fucking ripper time out there.
Yeah.
So you want to elaborate on that?
Yeah, look, it's interesting, right? Like, all commodities have cycles, right? It's inevitable. The gold price now is... Look, we took a view on the gold price a couple of years ago. Obviously, if I thought it was going to go the way it would have, I would have bought a lot more gold shares and bought just probably gold and personally would have done a lot better out of it. But look, we took a view on, I suppose, where we thought the tailwinds would be from an interest rate environment, inflation, the under exploration spend, the fact that the mid-tier majors hadn't made any real money, and kind of looked at, that's why we wanted to position Brightstar so aggressively. Like in the fullness of time, like I think it'll look very smart, but I think at the time of doing one M&A deal straight into another one, straight into another one, straight into another one, like people just go, mate, like give it up. Like, what are you doing?
You're doing it for buying sake.
Yeah, correct. Yeah. And the reality was we were just aggressive because we know we wanted to own and why we wanted to own it. And the reality is, you look at what we've paid for those ounces and those projects, they screen and comp extremely cheaply to any other trading metric in terms of other M&A multiples, what companies are trading on. So I think the fact that we were so hard at the footy made sense, and I think we're going to be the beneficiary of that, or our shareholders. But it's hard to time cycles. Like everyone's got 20/20 hindsight vision, right? You how good is that? Like I'm so smart, but the reality is you're making decisions based on what information you've got at that time.
For sure.
Yeah. So I think,
but it does take someone with a bit of gall to be able to make those decisions. I'm sure your experience, and I know we've spoken about this previously. There's a lot of people in the industry that just don't want to pull the trigger on things.
Yeah, for sure.
You know what I mean?
100%.
You would have seen that when you were at Canaccord. There's people who are a little bit standoffish, and then there's people who just want to get in there and pull that trigger, get it done.
Yeah, like you need to have obviously the right systems and processes and risk matrices and understanding what you're playing for, right? Yep. Like you need to actually look at every variable that contributes to success or failure, whether it's, commodity price, how do you protect against that risk from a hedging perspective? What are you doing from a balance sheet perspective? How are you financing this? What risk are you willing to accept or take from a production perspective? Exploration inherently just is risky punting at the end of the day, right? Like you're taking a thesis, an idea, a concept, you're overlaying different data sets, you're taking a view, and then you're spending money, you're spending capital to prove that up or not. So every decision is an element of risk taking. But you're right. Like I think inherently people are probably a bit more risk averse potentially than some, than Brightstar's certainly been in the journey, or other people. Simon Lawson, for example, from Spartan,
100%.
Someone that lent into that risk profile, and look at Spartan now. Like he had no rights to be turning off that mill and then spilling, drilling, and then drilling holes in a completely different area, looking for something completely different when you've got an open pit mine and a mill. Yep. Like that took heaps of balls to do that.
You hear a lot of stories like that, don't you? Yeah. Even the discovery of DeGrussa with Samfire, one of the last drill holes, hardly any money in the bank. And bang.
Same as Nova with Sirius, right? Yeah. That was literally the last drill hole. Like it seems to be the tail. I wonder how true these are, but it's a great story, right? Like you're sticking to your guns. You went there for a reason. You got a budget approved. You had the capital for it, and you've executed the plan. And obviously the success or failure comes your way.
You get some shareholder backing after that, don't you?
Yeah, correct. Because I think in the day, like you've had a theory and you've tested it and you've backed it up, and it needs to be good science behind it, and ultimately you can be successful. Yeah. There's people in the industry that have multiple experiences of success as well, which kind of starts to think that it's not just luck, right? There is a system that's at play, whether it's Mark from Sirius, for example, Mark Bennett, had Sirius and Thunderbox and a few other successes. There's plenty of people that have had multiple successes from that perspective. Like, again, not going to keep giving Tony Trumps here, but the old boy was obviously successful with Cosmos and then Andover. Right, there's two world-class discoveries. There's obviously a system at play here that kind of leans into increasing the probability of that success.
Yeah, beautiful.
Yeah. Beautiful. So just on that, I can see you're developing a real culture throughout Brightstar. You see a lot of posts on LinkedIn and also your webpage about what's happening within the company. You've got your grand opening of Fish with a photo and everyone there. It's just a brilliant portrayal of how the heart beats at Brightstar. Can you tell us a bit about that? Like your decision we touched on earlier about going owner operator. Mm-hmm. What drives your company? How do you motivate people, your team, and what are you getting back in doing that? Yeah, look,
that's some great questions, Eric. Like I think my personal experience or belief would be that you can't give someone intrinsic motivation, right? Like the individual needs to want it themselves. Like you used to have this saying at rugby, like you can't teach someone to tackle because you need balls, you need technique, and you can't like
you need hunger.
Yeah, exactly right. You can't tell someone to stand in front of 130 kilo Samoan unless they wanted to be there, right? That's just reality. And I think
that's true.
That you take that same philosophy into the workplace environment. Like you can't encourage someone enough or motivate them enough. They've got to want it themselves. And it's kind of a classic saying in investment banking, like you could be paid really well, but if you're working 100-hour weeks, like you're not doing it for the money. You're doing it because you've got a passion for it. right? And that's the reality. So taking that kind of theory or learning into the workplace environment, like you've got to almost hire for the right caliber of people and the right talent, which, it's easier when you're kind of a small business, right? But obviously you get to, it gets larger and larger and you kind of lose that touch point a little bit. But the reality is you need to be attracting the right talent. I think we've been successful in that because of the business we've been trying to build. And I touched on it before, but, the workforce at Brightstar is largely in their 40s. For me, that represents someone that's got 20 years experience in the field as a geologist, an engineer, or, whatever it might be, whatever their skill set is, permitting professionals, mining professionals, accountants, etc. But they're still young and they're hungry, right? They want to build a name for themselves. They're not complacent. So we've actually attracted a lot of talent from people from the mid-tiers of guys and girls that really want to try and build something. It's pretty rare to get that experience to build something from the ground up. So I think ensuring that you attract the right talent and retain it is hugely important to that cultural piece, but also to the ultimate then to the success of the company. And look, we've got some great people in the business. That values rollout that we did at Second Fortune and Fish was an idea that came out of our senior leadership team, and I was very supportive of it. I can't think of another mine site that's got huge murals painted on various walls and things like that, and of the values that the guys drive past every day. And
and that's important.
Yeah, look, it might seem flippant, and there's some colour on a wall, but it's real, right? Like you've got to live and you've got to breathe that, and you've actually got to embed those values into the business. And look, you don't get it always right, and at the end of the day, we're a new business. We've been around in its current iteration, let's be honest, for 12 or 18 months. And being focused on that's important. And I think that's something that's important to me. Like I enjoy my work. I enjoy working pretty hard, and I feel like we've been pretty successful in getting guys and girls in the business that emulate that. And if you run hard enough, you run fast enough, you can build something. I mean, my personal view from a mining perspective, let's pick on gold mining. It's not overly technically complex, right? At the end of the day, you're taking big rocks and little rocks, goes through a proven CIL circuit, which has been around for 40 or 50 years, and it produces gold bars. Obviously, there's nuances with metallurgy and geotech and mining and geology and all the rest, but the reality is you're not relying on chemical sets. It's not rare earth refining. It's not something that's got deep IP really. So I think the reality is there's not a whole lot that can't be solved without good people and capital. And they're the two things you can
find the ore body, crush the rock, send the gold bars to the Perth Mint.
Correct, and get the right people operating the business. Get the right bums in the right seats. Retain that. I mean, obviously, sounds easier. It's easier said than done, right?
For sure.
I'm being a little bit. Flippant.
Well, I mean, look, in 12 to 18 months, look what you've done.
I like to think we haven't got started yet. So it's come back another 12 or 18, and
that's what we'll be doing, mate. We'll be getting you back in 12 or 18 months, mate. Look, even though I did say to Erica this was going to be his question. I want to get into because he's King, president of Laverton, mate.
I'm not.
No, Patrick Hillers. We just did an episode last week with his brother. Laverton and community impact. What are you guys doing to support the community?
Yeah, look, it's a good question, something that we've been focused on over the journey to ensuring that you've got that right social license to operate. I know it sounds flippant, but you actually need to ensure you've got the right relationships with the Shire, with the native title owners, wherever you might be operating. We do operate across multiple shires, with the Shire Menzies, Shire Laverton, Sandstone, etc. So you got to have those relationships in place. We recently sponsored the Laverton Cup. So it's called the Brightstar Resources Laverton Cup.
I attended. It was a fantastic day. Yeah, and you had some good patronage too.
We did. So we've made a thing of it last, 3 years now. We take up, probably 20 investors like shareholders, fund managers, brokers, analysts.
A couple extra next year, right?
Yeah, absolutely.
I'll be there come hell. But
look, for us, it's a very small outlay to kind of bring 20 or 30 people to Laverton who have never been there before. And, there's people who built their careers telling investors how good projects are, but they might not have even been to the site. They might not have been to Laverton, with the analysts or fund managers or whatever it might be. And I think it's a really cool experience to try and interlay, genuine social engagement, having fun, having a punt on the country races, always a bit of a hoot. But then, go and see mine sites, go underground at Fish, you go see what we're doing at Lord Byron, go to the processing plant. So we did that kind of a month or so ago. And look, that's pretty nuanced because you look at, a few other companies that operate in the Laverton district don't have anyone there. And, they might have workforces 20 times the size of ours, and there was no one there. Yet Brightstar, as a small business, had 20 or 30 people spending money in town, which kind of buys you that goodwill, and you're kind of dealing with local contractors, but, with the extent you can, you get everyone from local towns. So we spend a lot of time in there. Guys going in and out of there every day, arguably. Corkscrew Well's just north of the Laverton town. Everything else is just the south. So, we're through there all the time. But it's important, right? Like we do the same thing down at Menzies. We sponsor the local school there with a meat tray every Friday just to try and get, kids going to school,
nice.
to primary school.
That's really good.
Yeah.
That's really good.
It was driven from one of the guys in-house at Brightstar and said, look, this is a great cause. We should do this. What's it going to cost? I said, a couple grand. Why are you even asking me? Like, that's great. Like, mate, a couple $100 a week for a meat tray to get a kid to go to school for 5 days and it feeds his family for a week. Like, that's a no-brainer.
Yeah, that's so good, man. Yeah. That's awesome.
So just stuff like that. Like, and obviously as a business, as an industry, we could always be doing a lot better. And I think it gets thrown into that ESG bucket. It's kind of a dirty word at times when people. But the reality is, you need to have those relationships in place so you can do stuff. Like if you're an arsehole and no one likes you, it's hard to get things permanent approved. Shires can easily say, hey, you can't use that road or you can't do that, or so you actually just being
very true. I've heard a few stories recently of that exact thing happening.
Yeah, just being a normal good bloke, it shouldn't be that hard, but I think sometimes it is. But I think that's some of the philosophy that we try and emulate in our business. And as you said, we're still growing, we're still finding our feet. We could probably do a lot better at it, and we'll continue to try and do so.
Beautiful,
awesome, great. Well, that just about wraps it up. I think. Have you got any more questions?
No, but is there anything that you'd like to scream out to the shareholders, mate?
Look, I appreciate everyone for their support. To be honest, like we are a growing business, and the journey really is just getting started. And if we're successful in what we want to achieve, then this genuinely should be a mid-tier producer in the next few years. And I think that journey will be pretty cool. To be honest, it's probably going to be pretty unparalleled in the industry from that growth perspective, from that growth profile. We've tried to take the best bits of our peer groups or the people that we look up to or I look up to in the industry, be it, whether it's Orabanda or Genesis or even like an Evolution with their journey. That was a 300 million market cap and now it's 22 billion. And that's over 12 years, bought really well, operated really well, sold well, like just things like that into the business. How Clarkey operates Capricorn, again, some awesome learnings there about operational philosophies and just trying to adopt the bits that I can see in the industry that work and that people respond to and respect, and just trying to learn from the industry, right? Like I've been in the seat for 3 years, hopefully in it for a few more years to come, and really enjoying the role. And I suppose working in the team that we've got, it's been awesome. There's awesome. So many guys that are committed, working hard, and want to give it a crack. And it's an exciting place to be.
Beautiful.
Yeah, well, we hope you stop on the chair there, Alex, and we get you back. 12 or 18 months down the track, and
be a totally different bloody story, won't it?
Hope so.
Yeah, I reckon.
Watch the space.
Yeah, bloody oath. Well, thank you very much for tuning into another episode on the Gold Room podcast. Hope you like this one, the Trifecta series. Thanks for coming back, Hilly. Bloody ripper.
Pleasure to
Alex,
be here, mate.
much appreciated, mate.
Thanks, guys. Appreciate your
Thanks
time.
for all of the support.
Thank you.